Now entering the Bitcoin Podcast Network.
Welcome to Buy or Sell What the Hell with Jason Jenkins, Alec Z, and D. JJ began his career at Charles Schwab as a trader in the equity and options markets before moving to the sell side to trade fixed income at V Finance, JDB Financial, and CG Capital. With over a decade of experience in trading U.S. Treasuries and building out institutional analysis, he covered all the primary dealers, large buy-side money managers, and hedge funds. And now he's applying his expertise to the cryptocurrency markets. Do you buy or do you sell?
And welcome back, guys, to another episode. Today is April 5th, and today I'm your host, Jason Jenkins. I'm here with my usual partner, Alec Z, and we have a special guest today, Noah Marconi, who's our senior blockchain developer, and he's here to discuss some tech. We always like to check in with him. He's got a pulse on what's really going on. He's up there in Toronto. So, Noah, how's it going lately, partner? You guys warming up there?
No, we're not actually. It's gotten much worse. We had a giant windstorm yesterday. So it's Canada, 90 kilometers an hour wind gusts, knocked over a crane in Scarborough, I think. Transformer fires throughout the city. So it's not quite a disaster zone or anything like that, but I was inconvenienced for a few hours without power.
Goodness.
Yeah, so we're back to normal now, so I'm much happier. Other than that, keeping busy up here. There's a lot of work going around. A lot of it's a blockchain city. There's a lot of interesting things happening here. So I'm keeping busy, keeping entertained, and getting into some interesting tech lately.
That's great. Well, let's hit on the markets a little bit, as we do. Dimitrix wasn't feeling well today, so Alec, did you have some other things you want to hit on after we do this?
Let's hit the Bitcoin movement, and we could talk to Noah about what kind of projects are interesting.
You know, I actually want to talk too. Well, let me hit on Bitcoin, and we'll talk big picture, because there is a pretty big shift here that's going on in markets, and we're getting close to some big picture breaking points. We got to really watch tech. The FANG stocks really matter up here from the equity standpoint. If they start to break, you're going to see some capital flows really shift. And then I'll talk a little bit about what I see going on with the dollar. But BTC and Bitcoin, we're still just stuck in this soft patch. We've been talking about it for several weeks now, really since we made our last lower high just in front of 9,000. And we've basically sold off. This is the 8th or 9th day down from some of those levels. We're actually started to crack back below the 8, called the 8-period moving average on the daily chart. And so we're back to watching this big intraday low of 58.70. You have some of the daily closes are right around just above 6,000. Our pie line's at 6,000. So it seems like our whole community is waiting and watching. And then at the same time, we've been pretty busy on the short side, intermediate term and day trade stuff, all just trading futures, and some of the international community that has the options of short. A lot of guys are using BitMEX, but there's been some short selling opportunities, but that's really it. I mean, we did add to some longer term positions like Cardano and Salts back at $2. Cardano 14-15 cents has been a pretty good buy. Last time we pulled the trigger on that, I mean, we rallied like 30% in a couple days. So we're just still kind of sitting and waiting here, big picture. But what I did want to hit on real quick, when we look at the dollar, I think it's important to watch the positioning. I've been trying to do that on the futures side with Bitcoin as more and more of that data comes in. But you can look through the CFTC futures and options positioning at the CBOE. You can keep track of who's long and who's short. And that's a pretty standard thing that you do on the futures side and the other markets. And so when I look at the positioning, there's a massive crowded short in bonds, specifically the last one I looked was 5-year treasuries, just a massive crowded short. The long position on oil is absolutely at all-time record highs. Everybody and their brother is long oil, and everybody's on one side of the ship in that market. And then also everyone seems to be bearish, negative on the dollar, and you look at the same positioning, everyone's short the dollar. So I think there's a big chance that the next big global macro move is a dollar rally. And I'm not exactly sure what that's going to do to our market, since we haven't been very correlated to global macro, but it'll definitely shift a lot of flows, and a dollar rally really can affect not only obviously FX, but I think the big risk in portfolios is that you could see the dollar rally, which dollar and oil has a very high correlation to each other. So if you get a dollar rally, we see the euro break 121, oil can come off, and if oil rolls over, you're going to have the same type of situation we had in 2014. You're going to have the same situation we had when oil really came off hard, and that can unwind fast, especially since everybody's long. And why that matters is because oil is a big part of inflation. So as inflation would then start to roll back over, you could see bond yields actually start to come down again. And again, everybody's short bonds. You can have another squeeze there. And so that's what we're really focused on. That's kind of been developing the last week or two, that I'm starting to get more and more bulled up on the dollar. And we'll see how that affects risk markets. I don't think a strong dollar is going to be good for emerging markets. The U.S. stocks haven't liked that, and it's important to know too, because S&P's bottomed with Bitcoin in February, and we're back near all those same lows. So if you do see S&P's crack, maybe that means Bitcoin wants to take out 6,000 on a closing basis. So anyway, I just wanted to bring that up on our show here today, because that is something new, and all the markets are connected. And if you do start to see the dollar break out, I think you're going to see some major shifts in the market. We've already seen the VIX is back in a bull market, so that's causing a lot of different swings, obviously, in the equity markets and other things, global macro. But that's kind of it, guys. That's what I wanted to talk about on the trading side.
Yeah, and being in a bear market as we are right now, I think this is the time where you can start evaluating and trying to figure out which of these technologies and projects are going to have the best upswing when it turns to a bull market. And specifically, I think the tech plays a big part in this. And I'd be interested to see what you're interested in right now, Noah. I know you keep your ear to the
heartburn hits
the ground here when it comes to technology.
I do. I'm interested in quite a few, actually. So people always ask me about the price. The price is going down. What's going on? What's going to happen next? And I don't have Jason's background, so I don't talk about it. I tell them what I do know is the tech is here, and it's not going to go away. Some of the players may go away, but the core technology, it's too practical and too useful to not survive. So I've been investing in myself as a developer to harness and make use of it. But looking at the projects, one interesting thing for me, just to see how the dust settles, is the projects who do not yet have a mainnet. What's going to happen to them in the future? Will launching the mainnet help turn around the price, or will launching a mainnet reveal some cracks or some deficiencies? Right now, there's a lot of speculative talk about price, but there's a lot of speculative talk about technology. Certain technology takes different approaches to consensus.
That's a great point. No, that's something that maybe you should, for some of our listeners that aren't really familiar, to maybe explain what mainnet is, because I do see that starting to come up more on the threads and social media. I wasn't even really aware of what that exactly meant, a month or so ago. But that's good. I think that's exactly right. I mean, there's a lot of speculative people saying, hey, you know, there's been so many ICOs. We're going to see who can actually execute. We're going to see who actually is, you know, full of shit and who isn't. But
Right. Yeah, that's exactly what we're doing on the technology side, sitting on the sidelines for some of the investments that are happening, and just saying like, um, these people have a good story. Let's see if they have good technology to back that up. But just to answer your question, the difference between a test net and a main net, it's the same technology, but when you launch a test net, you launch your core technology, you do a public network, publicly available. So it's not internal in your organization anymore. You're allowing other people to connect to your network, or better yet, you're allowing other people to run validators and nodes on your network. But with the testnet, there's no guarantee that the testnet will survive or the data will persist for the long run. The idea is that you're publicly experimenting with your testnet, and you want to stress test it, and you want third parties, different users, different clients running software on your testnet to make sure it's robust and will survive for the long run. So a lot of software companies will develop new technology, and they'll run it internally. They'll get some metrics, confirm it works, and then they'll run a test network saying anyone can sign on, but bear in mind, we could hit the reset button at any time and wipe all your data, so don't really invest money in it. Experiment with it and try to develop on top of it. But when the mainnet hits, that's the one that will last, and that's the one that will survive. But that's also the one where if somebody's looking to exploit vulnerabilities, that's where they'll be exploited. And that's where really push comes to shove is when the mainnet is launched and you see real world usage. So Ethereum has a mainnet. Bitcoin was launched ages ago. They have a mainnet. EOS, for example, EOS does not have a mainnet. They have a testnet that's up and running. They're running the DPoS validation. They're scheduled to launch a mainnet, so that should be a big publicity event. Technology-wise, I don't have a lot to say about EOS. They're definitely taking a different approach from Ethereum. And as a developer, I'd love to kick the tires. It's new. It's new and different. You're using C++ to develop, which is a mature industrial strength programming language. But from a development standpoint, there could also be some vulnerabilities hidden in my code that aren't so readily apparent as they are with something I'm more familiar with, which is Solidity. There are other mainnets on the way. AION currently has their testnet. AION. They're Toronto-based, so I talk about them a lot. But they're basically a fork of Ethereum with a number of different things going on. They have an optimized Ethereum virtual machine, which means your smart contract should run more efficiently, less gas, and faster. But they also have this concept of bridges, where you can run your AION smart contract, and through a bridge, you can communicate with the Ethereum network, which is incredibly cool. And it's not just transferring value. So it goes a lot further than atomic swaps. You're transferring data and information, state across blockchains, which if it works well, the possibilities are endless. So that's what I'm watching. Because they're in Toronto, I've been watching long before they had their testnet up and running. But I'm very, very excited about that one.
They're running a mainnet, you said, Noah?
Only a testnet right now.
Okay.
So they have a conference coming up. So speculation-wise, I would assume you do a big conference with just a conference for your own blockchain. I assume you'd have some big news coming out. But yeah, I don't think they have any official announcements except for the testnet seems to be going well. They've been stress testing it very hard. They're getting incredible transaction volume, so more transaction volume than Ethereum. But yeah, as far as I know, no official announcement on the main public network.
Mm-hmm. No, that's an interesting technology where you have all these projects and they're only growing. There's only more and more different blockchains being announced and released pretty much on a weekly or daily basis. And the ability to connect those together is a winning, definitely a winning technology.
And so Noah, that symbol is AION, right? I'm just
It
looking
is.
at it on the chart now.
Yeah. So what they do in the meantime, a lot of companies do this. EOS did the same thing. They release an ERC20 token on the Ethereum blockchain. And then they say, when our mainnet is up and running, you can swap those out for our native token on our own blockchain. So AION today, if you're trading it, you're trading a token on the Ethereum public network, which is tradable at a later date when the AION network is up and running.
That makes sense. That's smart. It's set a pretty good range. I mean, I'm just looking at it's kind of been in a downtrend, but it's had some nice moves. I mean, it's gone from $1.80 to $3.50, back to $2, back to $3, back down to, I think you're at $1.87 now. Well, that's good. That's one I haven't traded before, so definitely going to be putting it on the watch list. Alec, have you done anything with that name?
I haven't actually. It's the first time I've really taken a look at it was when Noah brought it up recently.
Yeah, selfishly, I'd love to have you watch it because I'm not actively trading it. I own some, so I'd love to get your take as it goes up and down, what it actually means from a trader's perspective.
Yeah, I mean, for sure. We'll put some signals out on that one. You know, EOS, that was one of the strongest looking tokens I've been talking about for a couple of weeks now. Is like, I know some people are kind of, you don't want to go back and forth about the team, or you know, they have different opinions about, you know, that blockchain versus Ethereum, et cetera. But the chart's been one of the strongest there is. I mean, our last buy signal, we just took some off and issued a sell signal today. I mean, it's up 10% the last week or so. So that chart looks strong. So that's interesting. Maybe we'll have to take a look and see when that, like you said, no, that mainnet announcement is. Maybe that it'll rally into that announcement and kind of buy the rumor, sell the news.
Right. Yeah, and I was giving someone advice on that one recently. They asked, well, we're doing a startup. Should we build it on top of EOS? And my answer was there's risk, obviously, with anything, but there's a risk in using Ethereum as well. But what EOS does is two major things differently from Ethereum. There's more, but the two that stand out for practical purposes for me are their consensus algorithm is different. They use delegated proof of stake, which means they don't have the lag associated with using proof of work. So Bitcoin and Ethereum are currently using proof of work. They have miners. They have to solve the riddle, solve the puzzle, and then they can issue a new block. You don't have that problem when you're doing delegated proof of stake. So EOS can do faster transactions just because there's no proof of work to worry about. So on the consensus side, they're doing something different, and they're receiving criticism, and they're receiving, some people are in agreement that it's a good approach. Lisk uses the same approach. So they're not on their own out there. But the other major thing they do different is they have their own virtual machine. So when you're running code on EOS, you're not running code on an Ethereum virtual machine. It's a completely different platform, and the developer environment is different. But the interesting thing is there are tons of C++ developers out there today. It's an industrial strength programming language. It's what industry uses. Java is another one, but yeah, go ahead.
That's what Lisp runs off of too, right? No.
Lisk, I think they're using JavaScript.
Oh, okay.
Yeah, which again, there are tons of developers out there. And what I believe is whoever wins developer mindshare will win or will survive at the very least. It happened with cell phones. BlackBerry was the dominant player when it came to smartphones, but they didn't have developer mindshare in the way that Apple gained developer mindshare. So Apple dominated. They had app stores. You could very easily develop a new Apple application. So a lot of blockchain projects are actually competing on a new consensus algorithm for speed and throughput, but they're also competing for developer mindshare. And Lisk is trying to get at developer mindshare through JavaScript, which is one massive developer community. And EOS is going the C++ route. Ethereum, on the other hand, they were first and they curated their developer community, but they created a new programming language. So you can't go to a software development shop and find existing Solidity developers You can only go to the blockchain arena, which is a niche arena, to find Solidity developers. EOS may have made a very smart move in doing that. AION, on the other hand, is borrowing developer mindshare. They will support the same programming language that Ethereum supports. So for free, they get access to the Ethereum developer community. So it's interesting to see them compete in different areas.
Yeah, and that's going to, I think you're absolutely right. I mean, you want to see who's going to be the dominant players long term. That's got to be a big part of it, you know?
Oh, for sure.
Yeah. I mean, you've worked on Solidity for a long time, but you know, if we want mass adoption, it would take so long for everybody to learn that entirely, you know, new language.
Yeah, and there are arguments for using Solidity. It is designed for writing smart contracts, and there are security considerations that they kind of built into it. But at the same time, they wanted it to be easy for people to learn. And whenever you hear somebody say that about a programming language, there's usually security flaws around ease of use. But they made it similar to JavaScript in some of the syntax. In my opinion, it's more like C or Java than JavaScript because it's a strongly typed language. But the general idea is it's a new language. You need people to learn it, however familiar it may be.
Oh, that's great stuff. I'm looking up Lisk right now. That was one we had on our watch list too. Just bring it up.
Yeah, it's funny. We both have our watch list, but for different purposes. I have them on my watch list for when they're ready for prime time. I want to try developing an app on them, just to see what the experience is like.
I was going to ask you that too. Have you worked on Lisk then, or?
No, last I checked, which to be fair, it's been a little while, but last I checked, they weren't ready for prime time. But they do have some things on the roadmap that you hear buzz in social media that the community is getting excited about. So once it's ready, once it's launched, there's some SDKs as well I heard them talking about. Once all of that comes out, I'll definitely kick the tires. As a developer, the blockchain is niche, but if you can develop on multiple blockchains, it makes you a hot commodity.
Yeah, I can see that. Well, the other one I want to ask you about, Lisk was 0x. Lisk looks like it's still, you said not ready for prime time as far as application standpoint. The chart's the same thing. It's still just making lower highs. It hasn't turned the corner. So it's similar to the rest of the market. I think the level to watch on Lisk is like 160,000 sats. So it's not quite ready to turn the corner either. But the other one that we've had a lot of interest, Noah, in is a newer position that we're looking to start at 0x. Have you been trading that one, or I know you've worked on that one a lot? If you want
to, yeah. So not trading. I'm waiting for some things to settle before I start trading a little more actively. And it's the project we'll talk about later, Rhythm. If it's easier for me to take your advice, Jason, then I'll trade more actively. But right now, I'm quite passive. But from a technology standpoint, 0x is awesome. They've released a protocol to make it easy to trade tokens in a standardized way, in a trustless manner, on the Ethereum blockchain. But in releasing a protocol instead of an app or a full-blown application, what they've set themselves up for is third-party adoption. They don't want to run exchanges. They don't want to they don't want to be the place consumers go to trade tokens between each other. They want to be the protocol that developers use to create applications for people to exchange tokens. So they've done quite well so far in gaining interest from development teams. There's multiple exchanges. Radar Relay is one that uses 0x for token exchanges in a decentralized way. I don't know if they have the volume yet to offer the kind of liquidity that you'd want to see, but they have a platform. It's up and running, and it's using 0x. I've even heard in Toronto there's a company. They're gonna hate me for messing up their name. It's Lendified or Lenfield. It's something in the lending space. You'll see their logo on the 0x site. They're offering margin in a decentralized capacity for ERC20 tokens, which is incredibly cool. And that's supported by 0x. So it's a simple protocol, but what it allows you to do is a whole host of activities. So they've done well in creating something general purpose that a lot of people can use for trading. And they've done an even better job of making it easy for developers to adopt. So again, from a technology standpoint, they'll be around. They have been around. They're actually incredibly active in the community. Any conference or hackathon I go to, they have a presence. They're sponsoring prizes, and they're chatting it up with developers and getting into what people are building.
Now, what are the uses of their token? I mean, it's trading at 61 cents right now. If you want to price versus Tether, it's had a great move. I mean, it was basing around 20 cents and then it exploded. Went 10x. I think it topped out around, looks like basically at 240 in January with the rest of the market, and now it's all the way back to 60 cents. But I think that's one that there's huge opportunity in for sure. And when this market turns, that's when I think it'll be the major winners. I was just curious what kind of use cases, or is it a utility token when you use 0x, or?
It is. So that's what they set out to issue, is a utility token. And I'm not a lawyer, so I can't evaluate. But even when they issued their token, they were very clear. If you're in this to make money, this is not the token for you. And I don't know if that's for the lawyers or if that's real, but the use case for the token is fees. So if I set up a decentralized exchange and I use the 0x protocol to do the exchanges, I can charge people fees, and I can actually use the protocol to do that. And 0x tokens are how fees are handled. There's some really cool things about the protocol also. It seems weird to say, you're going to trade 2 tokens on my exchange and I need you to find this other token in order to do so. For the privilege of trading on my exchange. But the protocol allows you to do multiple token swaps in one transaction. So you can abstract away, even though you're charging fees in 0x tokens, your user never needs to feel the pain of acquiring 0x tokens. They can execute the trade, and off of the trade, there can be a third token swap that takes place to trade either the maker or taker, whatever token currency they were using. Trade a sliver of that for 0x, and that's what gets held back as a fee. In addition to that, they also wrote a new blog post recently talking about governance. The protocol is a protocol, but it's not set in stone. They do have a plan to make it better over time. And stakeholders should be the ones guiding what happens next. So they'll be using their token in some capacity there to make decisions about future protocol upgrades, which is interesting. They've done a great job of gaining stakeholders, and now they've made it in the stakeholders' best interest to hold some tokens.
Sure. That makes sense. Alec, did you have anything to add on that? I mean, that 0x is just what they're trying to do is just, it's fantastic. And what we want to do with Rhythm and our exchange and our trading platform that we're building, obviously, Noah, you were right up with, you were up on them right from the beginning and wanting to use them. But Alec, did you want to explain on that?
I can't really add too much more to what Noah already said about the technology standpoint, but I think like a bear market like this, really, you can kind of take the time and really think about how you want to improve your investment and trading strategy and style. I think you really, take the time, educate yourself on all these different technologies and markets, kind of rethink your portfolio allocation, or everything, how you really want to start going forward. And I think talking about the tech and what projects out there are actually aiming for adoption and not just hype, I think it's very, very valuable conversations.
Yeah, and what the community feels is valuable and what the community is using. And that's why, I mean, Noah, you're always so valuable, kind of getting the insight on where everybody's kind of moving towards and what's working and what's on the horizon. Do you want to talk, Noah, a little bit about Rhythm then, guys? I think
I think it segues really well from talking to 0x, because we'll actually be leveraging 0x.
Right.
Yeah.
We will be, and it's incredibly cool. What I like about it is 0x talked about being a protocol for decentralized exchanges. They were tackling liquidity and trustlessness in their white paper. But our use case is mature financial services. It's a brokerage house, if you had to give it a quick, simple analogy. But it's technology fueled and it's decentralized. You don't have to trust us with your money because we won't have access to it. What you can do is use the 0x protocol to indicate under what conditions you're willing to trade something. And the smart contracts enforce that those conditions are met or the trade doesn't take place. So I really like our use case of the technology because I think it's starting to step outside of what they were thinking. And it's a testament to how general purpose they made this protocol. Lendroid is the other company. Lendroid is the one doing margin. They're offering margin loans on top of a decentralized protocol. We're offering a brokerage house or brokerage trading services on top of a decentralized protocol. And what really gets interesting, again, there's tons of interesting angles on this thing. When you get into financial services, now you're offering services. It's not just technology you're throwing out there. So there could be, depending on what you're offering, some regulatory considerations you need to think about or talk about or worse, implement. And this protocol lets you do that. So if we did have restrictions where we can only offer these trading signals to people who are registered on the platform, we could have a whitelist for certain things, or sorry, you can. The general idea is you can be compliant with AML, you can be compliant with KYC requirements, and use these decentralized protocols, and basically what that gives you is all of the benefits that you used to have in the traditional financial sector of working with people who know the industry and people who are above board and following the rules they need to follow. So you get that assurance, but at the same time, because of the technology choice on the platform, you get transparency and auditability. You can see that they didn't pull a fast one on you. You said to do this trade, and you can watch the trade happen on the public blockchain. And they can never take your funds, which is not something that the existing financial sector has. Even today, there's still horror stories of some money manager running off with someone else's retirement fund. 0x means that we can't touch your funds. We can only give you the trade that you wanted to have, which I think it's super cool from a technology standpoint, but from a service standpoint, just removing that possibility, we're saying you don't have to trust us, and that's one of the incredible things about working with the software.
Yeah. And that is, again, it gets back to our whole vision with Rhythm. You're going to have a whole crossroad of the old financial services and doing it better. So not just saying, hey, here's a software package, here's access to buying and selling, we have low commissions, but actually making calls on the market, having a process and a model, having a timing process, being able to help people actually. And so few financial service companies have a timing process. So that was what really started, the vision for what we were going to do, both at Jenkins RM and then obviously here at BlockEdge and with the Rhythm platform. But then we saw the same need that you've been explaining for on the technology side, is we can totally change the old third-party custodial model. And I talked about that a little bit in the last show, Noah. We were talking about MF Global and what a disaster and just a tragedy that was. I mean, the CEO is basically, I don't know if you're familiar, but he was off trading in the different repo markets, and he was basically taking the customer funds, leveraging it up. He was trading Greek bonds, and he just completely blew up. The guy, I don't even think he ever went to jail. I'd have to go back and look. It's just out of control. But so much of that happens, and some of it's malicious. Some of it is not, where you just don't know the other counterparty that you're trading with, if they're solvent. And all those issues really come about when you have a recession. That's when the bad things tend to happen. You know, liquidity dries up, and you get to see who's really, especially in finance, you get to see who's really, you know, has their risk managed correctly and who's got what on their books. And so the technology, that'll be amazing. That, you know, I do kind of think to myself, well, you know, the average person or somebody like my folks, you know, they might at the end of the day, hey, can you still set up a wallet for me and you guys handle it? Because, you know, I like the fact that you can go in and do the trade for me, but I'm still going to need help, you know, setting up a Ledger Nano, because I'm just as likely to lose it as some hacker taking it from third party. I don't know.
Right. And there's opportunity there as well. So I don't know that we're offering anything incredible around custody just yet, but in the future, even if you get into that territory, the blockchain being a publicly available ledger, that funny business can't happen. We can't take the money if you're offering custodial services. You can't move the money without it being publicly visible that you moved it. And then all the red flags go off. With these other schemes you're talking about, they've been doing it for ages. It's just when the recession hits, it comes to light what they were doing. A couple margin calls reveals that, hey, the money's gone. So even when you're not doing something in a decentralized sense, the blockchain offers transparency, which is cool. I wanted to point out too, from a consumer perspective, I do follow your trading signals, but I don't have the discipline to actively act on them. So what I'm really looking forward to is the ease of use that goes along with it as well. So if you're issuing signals and we've hooked those signals into software where I can just click and say, yes, Jason gave good advice today, I'd like to follow it. That also allows somebody who gets it. Like, I understand what you're saying. I just don't have the time to put it into practice.
Mm-hmm.
It removes the time commitment. I can understand what you're saying, and you say this is a good move right now. Look at what's happening in the cycle. And I just need to click a button saying, I agree with Jason, and I'd actually like to take advantage of that with my account. That's something pretty cool that I'm personally looking forward to. I love technology that benefits me. You get these other people doing altruistic things, but this tech can actually they can make me an active trader, which I think would be pretty cool.
Yeah, that's true. Because not everybody's sitting in front of their computer, you know, wants to trade full time. So you're absolutely right. That's a big part of what we want to do with the Rhythm.
Yeah, let the pros do that, and let me sit back and benefit from what the pros are doing.
Yeah, that's exciting. Well, for, you know, some of our newer listeners, you might be wondering, what the heck are they talking about, this Rhythm, this or that? And if you go to rhythm.network, that's our ICO that we're in the process of doing. We're actually trying to raise some money on the private side right now. So anyhow, for those that are interested in what it is we're building out, that's the best way to kind of get a feel for everything we'd like to do with that project and what we'll be doing in conjunction with our asset management firm, which is blockedgecapital.com. But yeah, you guys read the white paper, you know, you can see Noah and get a nice picture of Noah and see who you're listening to today. He's on the website down there, along with their other advisors. Alex, what else?
No, not much. I think we've hit Rhythm so many times. You want to just list off some majors? Let's get some more trading talk in this podcast.
I think the biggest thing right now, I've been sending out levels of, there's across the majors, if we talk about the majors, maybe the top 20.
Yeah.
Some of these big picture levels are broken and some of them haven't. A couple that we're really watching is Litecoin down at 100. Ethereum's big area was 430 to 450, which broke. So we actually took some risk off there, and it's kind of in wait and see mode. So we're at big picture levels. It's going to matter where we close this week. Again, 6,000 on BTC matters on a closing basis. I said the 100 level on Litecoin. We have been playing EOS that actually has some pretty good momentum. Monero we were looking at today. which again, it hasn't. So when I talk about these big picture levels for the 350 350 area, the 450 area on Ethereum, that was the February lows it broke. Monero's February lows didn't break, and again, that's the low that Bitcoin made on the 6th of February. So there's still several markets that are trading above that long-term tail line, which keeps the long-term bull market in place. And then there's some of these major coins have actually started to break down, and it's just time's going to tell whether or not we're gonna hold these areas. So here we are in April, got a lot of month left to have a monthly close below the February lows, but we need to watch these areas on a weekly basis. So we're telling our guys, you just be patient. Most of the opportunity has been on the short side. But again, you don't want to get caught too aggressive short at a big picture major low. So there's a lot of smaller trading going on right now. We're waiting to see some confirmation. I'd like to see a rally off 6,000 and give us an actual bullish event, like a bottoming tail or bullish engulfing, different setups that actually, where I can look at the chart and say, all right, there's some real money coming in here. Now price is starting to prove itself. But unfortunately, we're just kind of in this hurry up and wait market mode. That's kind of all I really had, guys, to touch on.
Yeah, and if you want to keep up to date with market moves and you want to hear what we're talking about in the chat room, just go to jenkinsrm.com and you can sign up for our free chat room. Come join the conversation.
Yep, that's the easiest. And Noah's in there. Noah, I don't know if there's other ways for people to get in touch with you. You'd mentioned maybe Twitter or maybe not.
Yeah, that's the easiest way. What else? LinkedIn, Noah Marconi.
Sounds good.
I tend to accept connection requests a little too readily, but
on a lag.
Yeah, it's good for networking. So yeah, Noah Marconi. If my name's on the podcast there, feel free to reach out to me on LinkedIn. I'm on GitHub as well, but I don't know if you can reach me through there. And definitely on the Jenkins risk management chat, I get email notifications if somebody sends me a message there.
Awesome.
And be sure to check out the distributedpost.com. If you guys want any sort of news, updates, op-eds, analysis, pretty much anything is going to be on the Distributed Post. We're still looking for contributors, so just go to thedistributedpost.com.
Yeah, Noah, we got to get. Have you written anything on there?
I have not, but I'd really like to. I'm looking at my schedule in the coming weeks to see if I can free up some time. It's awesome what you guys have already done. So me joining in and having some content up there, it would be awesome for me. And like we were talking about before the call, there's some really cool low-level technology things. So I don't know if they have teams around them, but there's a lot of techie subjects I'd love to dive into.
Yeah, you'd be great on there. You're the man when it comes to that. All right, guys, well, great episode. Noah, thanks for coming on, partner, and we'll catch you guys back here next week.
Great. Thanks, Noah.
Thanks for having me. Always good chatting with you guys.
Absolutely, buddy.
Now.